Welcome, ladies and gentlemen. Thanks for tuning in today. I do appreciate it. Well, folks, the time has come. Make sure your seat backs and tray tables are in their full and upright positions because the Silver Jet is cleared for takeoff and we have our fuel tank topped off with the most volatile and flammable fuel available. If any banker shorts get too close to our afterburners, they will get badly burned. It does appear a physical squeeze is starting. Stay tuned because in this video, we are going to look at the supply stress that has already been reported, as well as gold breaking over $4,000 per ounce. Please note that nothing in this video is financial advice. Here to dive into these topics with us today is Oren Elbaz, also known as the Silver Hermit. He is a market analyst and sound money advocate. Oren, welcome back, my friend. It's great to speak with you today.
Hello, good evening, and thank you for having me.
I would like to mention that in 1964, this coin was worth 50 cents, but today it is worth about $17.50. That means it is worth 35 times what it was in 1964. So even without a supply shortage, silver will still hold its purchasing power and protect your wealth as inflation continues to erode the dollar. Oren, do you think that people are too focused on silver reaching its all-time high in nominal terms? And where do you think we could see the GSR going from here?
Yeah, so things are going to start moving rather quickly, and it's going to be very frightening, including to us, the people who understand what is going on. It's going to be very volatile. It's going to be very fast, and as we're going to discuss later, our main objective, will be to not lose our heads, to keep our wits together, and this is something I hope to touch on today.
Right, absolutely. We are really heading into uncharted waters here. I don't think this is a top for silver. I think that all stackers need to do is just hold on and wait. Now,
Yes, like those of us who were, clever enough to start to stack silver in advance, we have the privilege of relaxing right now. We have the privilege of just holding on and not doing anything rash.
there has been a lot of talk about the LBMA recently. According to a recent report from goldsilver.com, last month the LBMA's own published data showed about 760 million ounces in total vault holdings. However, the vast majority backs silver ETFs and other allocated holdings, making them unavailable for spot settlement. When you subtract those ounces, that leaves about 155 million ounces of free float silver. And this is the number that was cited by TD Securities' Daniel Gawley. When he quoted that number, he mentioned that the LBMA could run out of silver in 4 to 7 months. So in early 2025, the situation might really come to a head. The annual silver demand is roughly 1.2 billion ounces. This is according to the Silver Institute, meaning the LBMA's free float is only enough to cover about 6 weeks of global demand. Now, according to the LBMA, silver inventories in London fell by 65 metric tons in September. At the same time, ETFs and ETCs added 824 metric tons of silver to their holdings. That's a net drain of 888 tons of real silver from the system. So it looks like this situation is already starting to unfold. Oren, what do you think about the possibility of the LBMA running out of free float silver, and what could this mean for the silver market?
Well, first of all, we have to make it clear to everyone that the LBMA is very opaque. The data that we are getting from the LBMA is limited. There is no breakdown of the ownership of that silver which they are reporting in their inventories. And therefore, we need to, as though, add our own data from other sources to try to understand if they're close to running out of silver. And I think it's a speculation, nothing more than that. Like I can take, the average monthly consumption of silver and try to project, according to this rate, how long will it take for silver to run out at the LBMA. But this would be ignoring the fact that as the price, especially if we cross the $50 mark, demand is going to shoot up. Then perhaps it's not going to last for 4 to 7 months. Perhaps it's going to run out in 4 to 7 weeks. We don't know. So this is a nice intellectual exercise that we can do. Have a look at the LBMA inventories, but there's more hidden there than is revealed. So if I look at the LBMA's inventories over more than almost a decade, then I see that they're almost at the bottom. The absolute bottom on this chart we've seen earlier this year, and it has rebounded a bit towards the 800 million troy ounce level, but perhaps it's starting to decline again. We don't know for sure. But what we do know is that LBMA Silver, the amount that they do have to lease out or to sell, it does back the shorting of silver at the COMEX, and that without LBMA Silver backing it up, I think banks will have to think twice before continuing to short silver.
I think if they do run out, that would mean that we would see silver explode in price. Now, I'm not sure how high it would go, but I think it's likely we would see it rocket to at least double its 2011 high, like gold has, but it could go much higher.
Yes. As I said, we don't know exactly how much they have. We only know that according to fundamentals, they should be that inventory should be gradually eroded. And once it gets to a critical level, then we're probably going to get that famous silver squeeze. And that's the only thing you should keep in mind, that time is working in our favor.
Absolutely. Time is on our side. Outside of the LBMA, there has been some posts on X recently about various sellers running low on silver. This post from Chris Sauer is letting us know that his Costco in Canada had ran out of gold and silver. And here is a post from Awakened Soul noting that her Costco here in the US is out of 10-ounce silver bars and 1-ounce gold bars. And here is an account from Turkey letting us know that their seller is also out of silver bars. And it was reported yesterday that the Perth Mint ran out of 1 kilo silver bars. Oren, do you think that these types of reports are going to increase in frequency over the next few years? And do you think the fear of missing out will cause retail investors to pile into physical silver before too long?
Yes. So first of all, these are anecdotal reports. That means, we don't know if the fact that a certain dealer is running out of a certain product means anything in regards to the entire market. And of course, what's happening in the retail market doesn't necessarily tell you anything about the wholesale market. But we are seeing evidence. We are seeing retailers running out of certain products. I've seen it myself. I've seen the selection narrowing. I've seen dealers with far fewer, with a lot smaller selection. And also the numbers, if you check to see how many units they have of each round or bar, it's a lot less than we used to see in the past. So perhaps it does mean that there's stress on the retail side of the market. Now, I expect the silver squeeze itself this time not to come from the retail market. These are not retail investors who are driving this rush towards silver. I expect the silver squeeze this time to come from the wholesale market. And remember, the retail side of the market is tiny. It hardly affects the wholesale side of the market, just on the edges. And it's good. It's good that retail investors are doing their part in squeezing silver. But eventually, I think it's going to be the big money. I think it's going to be the industrial consumers who are truly going to put the squeeze on that wholesale market. And when you see that there is no silver to be bought anywhere, I'm guessing that also means the wholesale market has been affected.
On top of reports that the LBMA is running low on silver, the borrow fee at the SOV has also been increasing.
Yes, so this is yet another indication that there's stress in the system. The SLV borrow fee is like the fee that you need to pay if you want to borrow SLV shares, SLV units, in order to short SLV. Now, I think the majority of the short position on silver it's not through the ETF SLV, it's through, the COMEX, the commodity exchange, but there could be some retail investors or some speculators who are trying to short silver through the SLV ETF. They are encountering trouble because there are no more units to borrow. That means they can't short SLV. They have to borrow. They have to pay a huge fee in order to borrow those shares. That means that there aren't any available, or there are very few available, and you need to pay a huge fee to do that. So it's not really profitable for those speculators to try to short silver. That's another indication that there is stress in this market, that perhaps the ability of the big guys to control the price of silver is coming to an end.
Gold has recently broken through the $4,000 per ounce level. This has left some people wondering if it's near its top. Would you say that it's about to top, or do you think it's possible gold has more room to run from here?
Well, in order to answer this question, let's go to the charts. Now,
Okay.
if I look at the long-term chart for gold, the logarithmic chart, then I can see that there's no clear line of resistance that I can point to that will tell me that gold is about to top. Since 1980, it has been moving in this rising wedge formation. And earlier this week, in the beginning of 2025, it busted through that formation. So on the long-term chart, there is no clear resistance that I can point to. This is why gold has this ability to continue running, almost indefinitely. There's just no specific place in which the shorts can, like, assemble some meaningful resistance. But it forces me to have a look at shorter term charts. So if I look at the weekly chart, for instance, and I look at this current run, again, on a log scale, then we can see that gold has been moving in what we call an ascending broadening wedge. I know it sounds kind of complicated. It simply means that it's moving between two lines which are slowly separating from each other. And usually this kind of structure is not bullish. Usually this means that it's going haywire.
Okay.
But if it's able to bust through this rising wedge, then we're in completely new territory. Then it's really going parabolic. Right now, we are approaching the upper boundary of that ascending wedge. So we could have some resistance around $4,100 per ounce. Um, does it mean it's going to top here? Does it mean it's just going to have a bit of a pullback, consolidation, and try again to bust through this line? I don't know. I don't know. As I said, we are in uncharted territory. So, but if we do cross, let's say if we do get to, for instance, $4,200, then I think it could easily run a lot further than that, perhaps to $5,000, perhaps even by the end of the year. I will remind you that in a previous discussion, we mentioned that concept of a measured move, and we said that according to one chart, we could even see it rising to $5,000 in its current run. So the $4,000, which I promised you would be an easy target, we've done that. Yeah, I kept that promise, right?
Yeah, good call on that.
And the next one, $5,000 by the end of the year. I want to remind you, we almost have like almost 3 months till then. That's quite a while. It could happen. So I'm not backing down from this prediction quite yet. Perhaps it's going to take longer. Perhaps it's going to happen only next year. But yes, I do see us getting to $5,000 in the current run.
Nice. Well, it sounds like there is probably still plenty of time to hop on the gold train if anyone is kind of watching from the sidelines or they're not sure if we're at a top. See
Certainly
what?
not a long-term top. Let's put it this way. I don't think we're anywhere near a long-term top.
So what is going on with platinum? Do you see much potential for the other white metal to do well in the coming years?
Hmm. Now, platinum is an interesting discussion on its own. We normally don't talk about platinum, mainly because it never used to be a monetary metal. It was always an industrial metal. Even though it's very rare and useful, it's as rare as gold, perhaps even more rare than gold. The reason that it has never become a monetary metal, in my view, is because it was discovered relatively late in history. Because it has a higher melting point, it was more difficult for human beings to isolate it and identify it as a separate metal. This is why we call it a platina. Platina means,
Little
little
silver.
silver, little silver,
Yes.
because people always, before it was identified as a separate metal, people thought it was just an impurity of silver.
And that makes
So,
sense.
yeah, that's a very interesting historical fact. But the thing is, I have a theory that the monetary demand for precious metals in this cycle is going to be so great, so huge, that eventually platinum is going to get monetized as well, alongside gold and silver. That's, it's just a speculation. And since it's kind of far-fetched, my exposure to platinum is small, it's modest, but I do have some. It's more of a speculation than anything else. If I look at the long-term chart of platinum, I can see that since 2008, it had this amazing run-up to $2,300 per ounce. And since then, it has been in this descending triangle, with the bottom, like the base of that triangle, is $800 an ounce. And it has moved, for years and years within this formation. And uh, this year in 2025 finally broke out of it. Now it had a bit more resistance. If you connect the tops, the 2016 top, together with the 2021 top, so you had a bit of resistance around 1500. We managed to go through that as well. So again, platinum has officially broken out. It can easily continue rallying from here. It will have some horizontal resistance at 1900. It will again have some horizontal resistance at the all-time high of 2300. But after overcoming those levels of resistance, I can easily see it setting new all-time highs. And the question is, how high can it go in this current run? According to the linear chart, I think it can go as high as 2,500. According to the logarithmic chart, it can go even higher than that. But I think it's too early to speculate.
I see. So it's got a lot of room to move up from here. It needs to really cover some distance before it even gets back to its 2008 high there.
Yes.
And I do think it has a lot of potential. Platinum's in every catalytic converter out there. There's not a lot of it, So if people start to get interested in it, I could really see it start to move.
Yes. People think of it primarily as an industrial metal, but I don't think what's moving it right now is industry. I don't think there's such a huge increase in industrial demand for platinum that would justify this current breakout. I think it's strictly monetary demand, and it strengthens my claim that eventually it's going to get monetized. But again, this is a speculation. Unlike gold or silver, which have a very long history of serving as monetary metals, platinum doesn't have that history. So I would keep, if you do want to have some exposure to platinum, I would keep it as a low percentage of your entire exposure to precious metals.
What do you see happening with the gold to silver ratio moving forward from here?
Yes, so that's a very interesting issue. And frankly, I'm quite surprised by what is happening with the gold to silver ratio. If we
Right?
look at the long-term chart of the gold to silver ratio, we see that it had this, monster pennant formation. Started at you can put the beginning of it at 2011, but it has been converging ever since the top in 2020, and it has been moving sideways, moving between uh, the 70s to 120, but it has been converging, and we're waiting to see that pennant breaking down. And I think the true bull market in silver will not begin until we see this formation break down, until we see this trend line which connects the 2011 bottom together with the 2021 bottom getting breaking down. And we want to see the gold to silver ratio really collapsing, but right now it hasn't even reached that bottom trend line. It hasn't even reached it. I was telling you a few weeks back that I expect the gold to silver ratio to fall to 77. It hasn't happened yet. It's still at 82. Although silver is so strong, the gold to silver ratio is still high. It's very, very high. It means that it has a lot more room to run. Just getting down to that bottom trend line, just getting down to 77 means that according to the present price of gold, it needs to cross $50 and get to around $52, $53 an ounce. And that means that's another hint that we have this, ability to cross that boundary of $50 an ounce and move higher than that.
So that's a really good sign that we are going to see the gold to silver ratio breaking down.
If we
It's
do get a breakdown, I have this chart in store, like what happens, like it's a scenario of what happens, what could happen if this pennant does break down, and if we do get a move down, which is equal to the huge amplitude of this pennant, that would take us to a gold to silver ratio of 13,
That would be
which
very exciting,
which is incredible to even contemplate,
right?
because that would mean, having the price of silver a lot higher than it is today. Of course, I don't expect it to happen as the price of gold is falling. I expect that to happen as both metals are rallying. which means that the price of silver needs to rise by a lot, and it takes us back to, the ancient ratio between gold and silver, the kind of ratio that we used to see back in ancient Greece, in ancient Egypt, in ancient Rome. And even, as far back as Middle Ages and Renaissance. And it is also the natural ratio or close to the natural ratio between the two metals in the ground.
Yes,
So,
absolutely.
yeah, so this is a technical indication that we could get back to that historical ratio. Of course, I don't expect it to happen overnight. This is a process. I expect it to take many months or perhaps many years. But eventually, I do expect us to get there. Of course, it also doesn't happen. It won't happen in a straight line. There's going to be a lot of back and forth. There are going to be all sorts of support levels for the ratio along the way. It could bounce back for a while. It could consolidate for a while. So nothing happens, overnight. And don't get too excited, but we do see the potential for that happening long term.
And just to give folks an idea, if gold was $5,000 per ounce and the GSR was 13, that would mean silver would be $384 per ounce. So yeah, don't get too excited, but that's what we'd be looking at if gold was at 5,000. Um, when we are thinking about gold and silver, we're always thinking about these metals priced in US dollars. But what is going on with silver in euros today?
Yeah, so I think it's an interesting exercise to check the price of silver in euros. It kind of gives you a different perspective, technically and also fundamentally, because there are a lot of rich people in Europe who view the price of silver in their local currency and they want to protect their savings as well. So if we have a look at the price of silver in euros, we see an interesting thing. Well, first of all, we see that since the euro has lost more value than the dollar, so we have already, in the beginning of 2025, we've already broken out in terms of euros. If you connect the 1980 high and the 2011 high, there's this falling trend line, and we've gone through that in the beginning of 2025. So for Europeans, they're already experiencing silver as though having a huge breakout. But it has just recently, I think in the past few days, reached its all-time high from 1980, which is at around 42 euros per ounce. So we are seeing, just as we're having a horizontal resistance at $50 an ounce in terms of dollars, we are seeing also major horizontal resistance at 42 euros per ounce in euro terms. So it's interesting that, these two charts are converging in a sense.
So in an environment like this, it can be hard to kind of keep it together mentally. People might do all kinds of different things. They might see a day when the metals are up and they decide to go start offloading some of their silver. They might decide to take out leverage and buy a bunch because they have the fear of missing out and they don't want to miss the next big move. What would you say to people in regards to just kind of keeping it together nowadays?
Yes. That's my main message to our listeners, that these are very dangerous times, very challenging times, and in times like this, in times like these, even seasoned stackers are in danger of losing their heads, like doing something extreme, getting too bullish, I don't know, going out, taking a second mortgage on their house and just plowing it all into silver.
Right.
Look, don't do that. Don't take too much risk. Don't go all in into silver just because you're seeing it approaching its all-time high, or perhaps even crossing its all-time high. We never know what's exactly going to happen. We are in very dangerous territory in which it is very likely to become volatile. We could see it going up a few bucks in a day, perhaps falling down, perhaps pulling back. The entirety of this move again, like I can't assure anyone that silver is going to just shoot up in a straight line. It could fall back, I don't know, to 40, perhaps even to 30 before it continues, to breach 50 again and move higher. Nobody knows exactly what it's going to do. And so I think each and everyone should have a plan and try to stick to that plan no matter what happens. If you've allocated a certain percentage of your portfolio to silver and you've already bought it, and your entry price is, let's say, significantly lower than the current price, just sit on your silver. Don't buy anymore and don't sell it, because probably your allocation, if you've decided that this is the allocation that you're interested in, then stick to that plan. Now, for those who don't have any silver, who've just heard about silver yesterday, they're in a tough spot, because on one hand, I would like them to go out and buy some physical silver right now because I think it's going much higher than that. But on the other hand, it could also pull back, and they will find themselves in this situation that
They'll be kicking themselves.
yeah,
It-
they'll be kicking themselves in the foot, because the price just fell after they bought in. So do get some silver, but be prepared that it can pull back, that there is this possibility. But long term, we are quite certain that long term, this is not investment advice, right? We're not investment advisors, but we believe that long term it's going much higher. So do get some silver, but don't go all in.
right, absolutely.
Don't
And
commit to too much money right now. Get some silver and try not to sell it no matter what happens. And this way, if it pulls back, let's say to 40, let's say to 30, then you have some spare cash, you have some dry powder to buy some more and get a lower average price. That's what you should do.
Absolutely. And yeah, this is not financial advice, but I'm hopeful that we won't see a pullback that would go much under 40. I mean, you just have to be ready for anything. But, just remember, what I was saying at the beginning of the video. Since 1964, silver has gone up and down, but this coin has gone up in value tremendously. Now, partially that's because of inflation and our currency being eroded, but it really is something that can protect you. And going into a bull market like this, you do have to be ready for extreme volatility, like Orrin had said. So it's something that you get with your extra money, and it you'll really be kicking yourself if you take out leverage and the price goes down a lot.
Yeah. So it's the most important thing is don't lose your head. Don't do anything extreme at this point that you wouldn't normally do. Don't do anything that too crazy.
Right,
Just
absolutely.
just have a plan, stick to your plan, and no matter what happens, try to keep a level head. Is that the correct expression?
Yes, it is. That's correct.
So keep a level head.
I think that's great advice. Um, and it's one of those things. If typically someone is putting 5% or 15% of their earnings into whatever investments, you don't need to deviate outside of that because a market's moving a lot. Just stick with your normal thing, like Orrin's saying. Well, Orrin, thank you so much for being here to share your thoughts on these topics today. Everyone, you can find links to his accounts in the description below. Thank you so much to everyone who watched today. Please take a moment to hit the like button and consider subscribing to the channel for more content like this. I hope you all have a great day out there, and we will catch you in the next video.